All right, so July 2022, so much has transpired over the last year or so in the oil markets. We have this multi-year bull market in place from the depths of the pandemic up to the fears of the impact on Russian oil production that came with all these sanctions tied to the Russian-Ukrainian invasion. So the major catalyst that fueled a lot of this bull market run up was this geopolitical conflict, this geopolitical event that is perceived to be strongly correlated to the Russian production, which is tremendous in terms of the overall global supply. And now what we're seeing as we're entering about 5 months into the war over there, we're seeing minimal impact to production, and that value is what I think is the focus of a lot of hedge funds and institutions, because any sort of decreased production impacts will have ramifications that will send the price of oil, I think, to its new trading range, the higher part of its new trading range, which is about 95 to 125, so maybe around the 120s. And you've got the situation where there's a few wild cards in play. You've got sanctions, you've got price caps, you've got Asian buyers. No one really knows the effects, which what I think is the biggest issue. No one really knows the effects that the lowering of capital in Russia, the lowering of resources, the impact from all these corporations withdrawing from the country. What are the long-term ramifications from that? Will it cause Russia to stumble on the production? There are quite a few voices in the financial world that are saying yes, that is in fact what will happen. So all eyes on Russia. That is the big major catalyst at the moment for increased prices. The U.S. supply is another story that's playing out on the other side of the world, where we're seeing builds in inventories, build in stocks, but simultaneously we've got the releases from the reserves. So without the releases, it appears that the stocks will be going down. Now that's pretty scary because it's a finite system here that the federal government has instituted, and several people are voicing concern about the latter half of the year, latter portion of the year, maybe Q4, when that will be drying up, and we could go into another deficit here in the U.S. So you've got the SPR releases and that situation playing out in the U.S., and you've got the Russia situation playing out. We still have not heard much out of Iran, a little bit out of Libya. Things are easing up. No major changes out of Venezuela. Same story with the domestic producers in the U.S. that they don't plan on expanding much. No major infrastructure investments to bring more from Canada in. And we're in a situation now where I think it's a waiting game between to hit 150, 160, 170. I think those levels will be coming in 2 years or so. But I think that 110, 115, 120, that's going to be 2022. That's going to be 2022 where we end the year. It's going to seem like oil prices are solidly on that ground, bottoming around around 105, 110, somewhere around there. So it's a lot will be happening. I think you can make a lot of money buying the futures contracts that are in backwardation. And for example, the December 2024 contract is going for somewhere around $75, which is a $21 discount to the price of WTI. So I will be loading up on those and loading up on additional futures contracts in the next 2 years. So we're entering this collision course where the OPEC production and spare capacity is so slim, and the global demand has stormed back so vigorously that we've got this inevitable collision that's about to happen, and there's just no quick answer. The SPR release appears to be a quick answer, but you're at a point now where it's not going to happen much more, because we do in fact need significant oil stockpiles in our reserves for security reasons, and it's would be considered reckless by many to continue to deplete our reserves in such a fashion just to control the price of oil. So it's possible we see a runaway spike here, but that would really come down to what happens in Russia, in my opinion. So let's see what happens. But my God, what a turn of events. We've got tons of volatility going on in the oil markets, but look a year out, look 2 years out, pick at some futures and hold, because we are in an unprecedented time right now between nat gas, Russia using the pipelines as leverage, sanctions, Asian oil demand coming back, post-pandemic recovery. All of this is being balanced by the financial world with the prospects of a recession. So that's got to balance out the recession possibilities, probabilities, and the physical demand story, which is playing out. We'll have to balance out, and it seems like that 95 to 125 range is where it will do so, just because of so much uncertainty going forward. We are going to enter the peak oil period in the next coming years. Oil is going to 300, probably 400 a barrel. It's going to cause all sorts of economic problems. Maybe that's going to happen in 10 years, I don't know. But the short term will be a higher sustained oil price that people can live with. They don't want to live with it, but they can live with it, and they will live with it. And that's going to be oil at around $160. Scary, scary stuff. It's on the horizon. Get ready to make some money.